Hello everyone, thanks for joining me again today. We're going to talk about FHA manual underwriting and the guidelines that come with it. We're going to just touch on a few of the most important and basic aspects. And then if you'd like to read more, you can read about it in the link that I'm going to put in the first pinned comment and also the description. And then you can also speak with someone and talk to them about your situation, and maybe you are working with a lender right now and it's not working out. And if you're having difficulty getting an approval, we can help you with that. So normally when an FHA loan is submitted to the automated underwriting system, usually you'll get an approval. That's the determination or the findings that you'll get an approval. But in some instances, the system will give it a refer status. And when that happens, that's when your file will need to be manually underwritten. Now, there's various reasons for that. You could have outstanding disputes or derogatory accounts. You could have a recent bankruptcy or foreclosure. You could have a couple of late mortgage payments. There could be various reasons why the automated system might say that this needs to be manually underwritten. And maybe you're working with a loan officer who has told you that, or you haven't gotten an approval and they're not willing or able to do that for you. So when you have to get manually underwritten, the underwriter is going to be looking at various factors. They're going to look at your credit, your assets, and your income, and then they're going to put the entire package together and figure out whether you should still be approved. And the important thing here is that you're working with a good loan officer who's experienced enough to know how to prepare your file and kind of sell it to the underwriter to make sure that you do get your approval. When it comes to your income, they're going to want to make sure that your income is stable, that you've been receiving stable income in the past, and that it's likely to continue for the next 3 years. They want to verify the sources of that income. If you earn cash, that's going to be a problem. If you're a W-2 wage earner, that's going to be the best situation to get your mortgage approved. If you're self-employed, you're going to have to provide tax returns, and they're going to dig into how much you write off and look at your net income. If you have a lot of overtime or tips or bonuses, those kinds of things, the underwriter is going to look at that and make sure that is you've established a history of receiving an income like that and that it's likely to continue. When it comes to the assets, they're going to want to make sure that your assets, there's enough assets there to qualify, but also that they've derived from acceptable sources and you don't see any recent very large deposits. So they're going to really scrutinize that. If you've had a recent bankruptcy, for example, Chapter 7, you're going to need to wait 2 years unless you're trying to get an exception. This is something that is going to result in your file needing to be manually underwritten. Same thing for a Chapter 13 bankruptcy. In some instances, you might be able to start the process and purchase a home before the Chapter 13 bankruptcy has been discharged. And we do have a video on this, which I'll link to up here in the corner. You can watch that one. But before your discharge, as long as you've made 12 recent on-time bankruptcy payments, you can get approved for an FHA loan. Again, though, another reason why your file may need to be manually underwritten. So the underwriter is going to also look at compensating factors, things that will, tip the scales in your favor to help with your approval. So a couple of these compensating factors will be additional payment reserves. So basically what this means is after you close and you've paid your down payment and your closing costs, the underwriter will want to make sure that you've got plenty of money left over to make future payments. So how many months payment reserves do you have? The more reserves you have, the better it is for you, and the more likely your loan application might get approved because you're making the underwriter feel comfortable that you can make many payments in the future because you've got that money already set aside. Your job stability. So how long have you been in the current role and in the current industry that you're working, and have you been jumping from job to job? That is going to play a factor too. And payment shock. Are you going to experience payment shock, meaning whatever your rent is now or your current mortgage payment is now, is it going to be much different when you have your new mortgage payment that you're applying for? They do not want to see it increase too much, and a huge increase in payment, monthly housing expense payment, is what's called payment shock. So the closer your new mortgage payment or housing payment will be to the current one, the less payment shock there is, and that's something that would be in your favor when applying for the mortgage. And then the other thing is another good compensating factor is if you're able to put a larger down payment. So even though FHA guidelines require just 3.5%, if you're able to put a lot more down, that means you're a stronger buyer or borrower, and it looks good when the underwriter is reviewing your file during manual underwriting. So hopefully that helps to answer some of your questions. You probably have a lot more, and like I said, just visit the link down in the first pinned comment or in the description. Visit FHAlenders.com, and someone will be able to talk you through this and help you to get approved. So I appreciate you stopping in and watching. Thanks, and hope you have a great day.